Hi all. Today we'll look at HDFC stock. We'll examine what is happening with HDFC shares, specifically the performance over the last year with respect to the stock price and its current phase. We will walk through HDFC stock price action against volume using Wyckoff principle. Also, we will make the price target for upcoming weeks. Before we jump into the charts, if you want to master the markets and trade like a pro, hit that subscribe button and turn on notifications. If you find this analysis helpful, please drop a feedback below with or ask a question. Your engagement helps the YouTube algorithm push this video to other retail traders who need to see this data. Let's help the community grow. I have taken the daily chart here and marked up the ranges. You can see it in shaded boxes in different color. As you can see, from the beginning of January 2025, the stock was in an uptrend. Look at the green arrow going up. However, the stock has been moving sideways since the April 2 till today. See shaded boxes. The stock remains in this sideways consolidation. The price has fluctuated between 940 and 1020. Within that range, the stock is exhibiting price action with no significant upward move. Wyckoff principles. As you know, Wyckoff theory involves multiple cycles, which we have seen in other stock analyses, consisting of markup, distribution, markdown, and accumulation. These four phases repeat continuously when performing a case study on any stock. We look at the chart and apply Wyckoff principles. They are demand versus supply, cause versus effect, effort versus results. We apply these principles using price and volume as leading indicators. To understand Wyckoff analysis, we must look at the three core laws. The first is the law of supply and demand. We know that when demand is high, prices rise. Conversely, when supply is high, prices fall. This is a fundamental understanding of the relationship between buyers and sellers. When prices are high, fewer people want to buy, but more people want to sell. A transaction only happens when there's an equilibrium, a point where the buyer and seller agree. The continuous shift in this equilibrium is what causes the price to move up or down. The second principle is the law of cause and effect. In Wyckoff terms, the sideways movement highlighted in shaded color boxes you see on the chart is the area where the stock is being accumulated or distributed. The third principle is the law of effort versus result. Here, effort represents the volume bar leading indicator, while the result is the price movement. There are many important aspects to consider when analyzing effort versus result. This analysis provides critical decision-making data by revealing what is truly happening with a stock. One of the most important factors is aligning ourselves with smart money, the large institutional investors. We should never trade against them. Instead, we should follow their lead. These investors are well-informed and understand a stock's potential far better than the average retail trader. To remain profitable, it is vital to trade alongside these big players rather than against them. But how do we know what they are actually doing? We find the answer by looking at price action and volume. Let's look at what happened with HDFC stock based on suggestions from the Wyckoff method. Looking at the blue shaded box where in April, there was preliminary supply side, where strong hands institutional investors started distributing stocks to weak hands retailers. An artificial demand was created, and the first level of high supply began emerging, which can be identified by volume. In the April-May timeframe, we saw above average volume somewhere around 30 to 50 million shares traded regularly compared to the average volume of 10 to 20 million. Stocks began being distributed amidst good news regarding HDFC. Once the first stage of stopping the trend finished, the cause was built for the distribution refer yellow shaded box. This action persisted from July through December. During this entire period, the stock was continuously being distributed. I have indicated with blue arrows connecting price and volume where high levels of distribution occurred, marked by high volume. What is the outlook for HDFC Bank price in coming weeks in 2026? The last stage of any distribution is a test. Refer the pink shaded box. This confirms that there is no longer significant demand. The strong hands have already distributed their shares, and the trend is now managed by weak hands. Consequently, any new supply will create panic. After the test, the stock showed a change of character within the range. For the red shaded box, that is what we are seeing at the beginning of 2026. The stock dropped from rupees 1010 to rupees 939 within a very short period, losing almost rupees 152, rupees 160 in just 4 weeks. Currently, the stock shows a sign of weakness. While it may try to push back up, since strong hands are no longer holding the stock, it is likely to fall further. According to the Wyckoff technique computation I have done, the distribution count suggests the stock could reach rupees 850. This is the near-term price projection for HDFC. Please pause the video and read the disclaimer. If you found this case study helpful, please ask your questions in the comments and subscribe. Your engagement helps this video reach other retail traders looking to master technical analysis. I have linked my past educational videos in the YouTube card above. I have been practicing the Wyckoff method for over 6 years, and it is the complete package I use to determine my buy, hold, and sell targets. Thank you for watching, and I'll see you in the next video. Happy investing.